Welcome to this video today. Just my 6 top trend trading tips for success. Very simple to learn. If you basically practice them, you'll soon have a great way of spotting high odds trading opportunities, getting in on some of those really big trends for profit. Even better, you only have to do one session a day, about 45 minutes. It's a set and forget trading strategy. Then you can go about your daily business, and if you've got a full-time job, it's also an ideal way of trading. Now, in terms of the tips themselves, let's start with the first one, which is spotting breakouts, levels. What are the best levels to look for? Well, most traders will look on a daily chart, see a level and want to buy a breakout, say to the upside. I would always say, always look at the weekly chart as well. If you look at the weekly chart and the level of support or resistance lines up with the daily, makes that level more valid. Support and resistance levels, the bigger the time frame, the more valid they tend to be. So get the weekly chart to back up the daily chart. It won't always do it, okay? But when you see the levels line up on both charts, it makes it a very, very high odds setup in my view. You can also look at monthly charts as well, because you can very often get the 3 of them line up. Also, the bigger charts can give you a deeper perspective of where prices might be going as well, which you can't see on the daily chart. So I'd always say use daily and weekly charts. Okay, tip 2, in terms of trading the breakout, a lot of traders will just come in above the level, say by a couple of pips or so. I would always say, give it 20 or 30 pips. You're looking for big moves. You very often find a lot of noise around major levels where prices can come just above and then go back and so forth. So make sure the level is cleared, okay, before you execute the trading signal. In terms of when you're in the trade, tip 3 would be do not give it very long to go the way you think it's going to go. I've mentioned this in other videos actually. You should only give it a day, okay? If prices are not closing strongly, or they're closing halfway down the bar, just basically take the trade out at the end of the day, even if you're in profit. Because what's happening here is, if you've got a major level, you're expecting the velocity of price to really increase and get a big move. If it doesn't, then it's going to be a false breakout probably. So you're better off to get out the market. Tip 4 is the 50-50. And by 50-50, I mean, it's a tip I actually read from the trader Bill Lippershutz. So it's really, really good actually, and it's so helpful in trend following. The 50-50 is this. Let's say prices move very strongly for you. You've got quite a bit of profit. Your objective is still a reasonable way away. You're looking for big moves here. And the price is overbought. So the best thing to do is, in my view, take 50% of the profit. Just take it off the table. Reason for that is, obviously you're overbought, so you're expecting a retracement, so you've reduced your risk, okay? If it runs on, you're still in. When it comes back to support, you can put that 50% back in. It's very good to do this in terms of your mindset as well, because you are active within the trend, and it makes it easier to hold long-term trends or focus on long-term trends if you do the 50-50, because long-term trend following does require a lot of patience. You just put a position in, set and forget it. So that 50-50 tip I've always found very, very effective, and if you learn to do it correctly, you'll actually make more money from the trade. Tip number 5 would be scan a lot of currencies, or as many as you can. I'd recommend doing about 15 currencies. And you get a lot of traders focus on the majors, focus on the crosses as well. You very often get much better trends in the crosses than in the majors. You get less noise, smoother trends, and at the end of the day, the name of the chart doesn't matter, it's the formation. Tip number 6 would be, if you're doing a breakout, okay, and no one else is talking about it, and you feel uncomfortable, you're against the herd, okay, that is probably going to be a good trade. And the best trades are uncomfortable, and it's one of the quotes I always remember from legendary trader Rich Dennis, who said, if it's comfortable, don't do it. You should be doing uncomfortable trades. And the logic of that is obviously, you're going against the majority. So if the chart formation looks all right, you feel uncomfortable, and you're feeling a little bit nervous, it's probably a good thing. Chart formation looks all right, just do it. Most of the trades that are the uncomfortable ones very often turn out to be the best. And I think they're my 6 tips that I would give. And in terms of the actual chart method you use, should you use candles on this, or should you add in momentum? My own view is add a couple of momentum indicators just to indicate where overbought is. And I think that's, or oversold. And I think that's about all I would do. But you can use candles if you want to. It's a very simple strategy, and it does make money because there's always big trends. The key is to be patient and filter out the high odds opportunities. So don't be rushing to trade every single breakout. Get weekly and daily lining up, daily charts lining up as your first criteria, then go from there. So hope you enjoyed my 6 trend trading tips. I'll speak to you soon. Thank you. Have a good evening. Take care.